To be honest, I haven't really spent much time on it. I was hoping Clint could take this topic. I said earlier, I'm OpenAI out. I'm AI to the wazoo. You know, it's like it's eating the world. I mean, if you just look on social, you know, it's the only thing trending. I mean, you saw the other day, you know, Google's stock price got, you know, Google was down, I think, at like 10% at one point, just based on the fact of some functionality around their chatbot. Like,
I'll get us started here. Okay, I am sorted. We're gonna do this. All right, here we go. You ready? 1, 2. Hey everybody, welcome to This Week in Pre-IPO Stocks podcast. With me is Nick Fusco, CEO of 8View, a pre-IPO secondary market pricing company. Don Nitti, venture partner at Social Leverage, a venture capital fund. And Clint Sorenson, chief investment officer of WellShield, an outsourced CIO and investment research company. We got 3 topics queued up today: OpenAI, Kraken's SEC fine, and IPOs coming in 2023. All right, first topic, crew. We got OpenAI. So these guys have a really interesting business model. I want to talk about that with you. But then naturally, they also just did this deal with Microsoft and announced it on Tuesday, which blew my mind. I watched the opening thing. But Don, I was hoping you could kick us off, man. Like, give us the 30-minute or the 30-second, version of what this like capped profit company is. If you're familiar with this, like tell us what that is. Like, how does that work?
To be honest, I haven't really spent much time on it. I was hoping Clint could take this topic. I said earlier, I'm OpenAI out. I'm AI to the wazoo. You know, it's like it's eating the world. I mean, if you just look on social, you know, it's the only thing trending. I mean, you saw the other day, you know, Google's stock price got, you know, Google was down, I think, at like 10% at one point, just based on the fact of some functionality around their chatbot. Like, it's totally insane. You know, it really feels, you know, you see these periods, you know, where we go into the depths of the market and meme and whatever you want. But, you know, if you just look at some of these stocks too, over the past few weeks, I mean, AI's rallied. I mean, their ticker obvious. You look at some other companies. I think Big Bear AI was another one. Like, I didn't really spend much time on the business. You had a company, Remark, the ticker's Mark. That thing rallied from like $120 to $270 the other day. It's a $26 million market cap company, right? It was a shitty IPO years ago. And, you know, just the AI buzz, it feels, it's overwhelming. I feel like I'm back in the NFT era, where you saw some of these stocks just go totally berserko based on the fact that they had some, you know, Web3 NFT functionality.
Yes.
Or
all right,
remember
so
the
Clint,
public
since
companies
Donnie
that
bailed
put
on
blockchain.
the
Remember they
question.
put blockchain in their name,
Long Island
and they
Iced
like
Tea.
get 100% return right after they put blockchain in their name, right? And that, you're seeing the same thing on the AI side. I'm not going to pick on any names, but I know one in particular that literally is just a consulting business. It has AI in the name. One customer makes up like 36% of the revenue. If there was a short, that's it. I'm not going to pick on the name, but I mean, it's just nuts. You're seeing, so to Don's point, it's very similar to a lot of the other speculative bubbles we've seen. I mean, you have China coming out and saying they're going to have, you know, certain companies are coming out with their own Chat GPT competitive products. So it's all the rage for sure.
Right. Okay, so does anyone know what this cap profit thing is? Clint, Nick, you want to take a stab at it?
I mean, it's self-explanatory, right? From what I understand, which really is the information came from you in that article. It's you know, you're capped at a certain multiple expansion, and that's it. So you've got up to a certain amount of upside, and after that, you can't earn anymore. So
yeah, it's a wild structure. Like, I haven't seen that before. But I will say this: like, that at $29 billion, and based on my math, it's the 6th largest pre-IPO stock in global developed markets now, right? It just shot from nowhere up to the number 6 spot based on like primary market valuations, primary financing round valuations. But yeah, it's 100x. That's what I found. So you invest $1 million.
Cloud? Is this like cloud though? Is this kind of like how what cloud ends? You know, how cloud ended up, where you end up having, you know, everyone. It's an enterprise model. right? You get to be, really the best or the most, I guess, developed technology partners in the space end up getting market share, and they're able to charge kind of what they want. Is that what the model ends up being?
Well, listen, the way I'm seeing this, I think it actually sits on top of like Microsoft Azure. So like Donnie, like what you had sent over, what Microsoft's doing with Amex and their like expense report thing, I'm sure that's OpenAI behind that. And they're probably just banging them for cloud fees, right? Yeah. Because that AI is probably sucking up a ton of cloud fees. Yeah, so
well, that's the biggest thing. If you talk to anyone who knows the space really well, and this has been kind of the thematic pitch from, we have the Access Fund where we invest in emerging managers, and we have some Web3 crypto exposure in there. Great managers, smart guys, but you're just having conversation with them. It seems like, the biggest fix that's coming from blockchain and where people are thematically focused is around AI, but it's around the fact that the amount of compute that is needed to process and power all of this.
Yeah, it's crazy big. Yeah.
You need the blockchain to do it.
It has to be decentralized. You have to have a network.
Is that the next wave of the resurgence of, Web3? Is it coming from there? Like Web 2 is dead. I mean, we know that, right? So
right.
That's
okay, so
exploited to its fullest.
So this is what I want to know from everybody, right? Like, so Nick, like, what is your favorite AI use case that you've seen out there so far, right? There's like some pretty cool ones bouncing around, but I'm like interested in everyone's opinion. Like, what do you see? What do you like about this?
So the generative AI piece, very cool. I'm still on the data ingestion piece. So a bit old school, but the data extraction from really challenging documents and learning those documents. Company I used to work for did it for municipal bonds, and every one of those is different, and there are 1 million plus. So instead of offshoring that or giving it to an army of individuals, the fact that we can now process that through AI is still in my mind actually really value add, because those are things we want. I think everything generative is very interesting, but it's kind of like, how creative can it be? But hey, competition is good, right? It's going to keep a lot of marketing soldiers in line, being more creative than a bot. That's phenomenal.
Yeah. What about you, Clint? Don, what are you guys seeing? What applications, use cases?
I like the legal side. I mean, if you think about companies like, Ironclad, people are over there trying to really disrupt the legal side of things. I don't know about you guys, but I spend way too much money on legal bills. And so when I start to think about how easy it would be through this kind of natural language process to automate and template out a lot of these key documents and to learn from them, I'm thinking, man, that's got to drive costs lower over the long term. So selfishly, I'm bullish
it drives costs lower for the law firm, not for you.
Yeah, exactly.
They'll charge me double.
They'll charge me double. Yeah, hourly wages go way up, right?
Hey, Clint, we're using this new technology, AI. It's $2,500 an hour now, but our cost just went down to $100.
And then you got to still pay the attorney to review it, right? Which is half the rates instead of their associate.
But this stuff, but to that point though, like Nick, your example, Clint, your example. I mean, this thing's gonna start taking jobs. Like if you're that army of people, right, Nick, and you're reading through Muni PDFs, Muni, offering docs, and now all of a sudden the AI is doing that in a fraction of the time. Like, you don't have a job anymore, right? So.
Yeah, but this is like the Luddites destroying the looms back in the Industrial Revolution, right? I mean, I think it just changes the jobs. You have, with the legal portion that Clint hit on, you're empowering this speed of a paralegal. I think this is brilliant. It's making things more competitive and faster. I don't see a downside here on the taking away of jobs.
Especially on the tech side. Like, think about how many is outsourced on the tech side. So what all this does to me is just kind of pave the way more towards this deglobalization, towards onshoring. Because at the end of the day, if you think about a tremendous amount of these jobs are going to be already offshore. A lot of teams, especially startup teams, offload a lot of their tech work, a lot of their development, a lot of their software engineering offshore. And so that, I think, is one of the other use cases we're not talking about, is the ability for it to write and create code, right? We are fast moving to a no-code environment. And I think these type of technologies are going to be forerunners there to help that become reality quicker than later.
Yeah, I mean, to
Right.
Clint's point, do you take 4 devs you had offshore, use AI, hire 1 guy onshore to kind of, architect this, and then you're creating a job here?
Okay, so disinflationary. Inflation's the hot dot, right? Is it
Yeah, technology's always
right?
deflationary. It's always deflationary.
Yeah, that's what I thought.
I don't know
All right.
about disinflation, but deflationary for sure.
Okay. All right, let's do this. All right, let's move on. Like Kraken got slapped this week by the SEC. Okay, fined for staking. They shut down their staking program. For those that don't know what staking is, maybe we'll have someone announce it. But we also got some numbers here. So this is from Nick, right? So Kraken's down 74% over the last year. The last primary round is at 10.8 billion valuation, and that's down big. So I have them at 3.1 billion based on secondary market pricing now. So that's pretty brutal. And then Don, you wanted to see kind of pull up this Coinbase versus Kraken chart. So it looks like those are trending pretty closely. And
Well, if you go back to that chart
Yeah.
too, that kind of touches on Coinbase. I mean, structurally, it's a public market company. Is daily liquidity, short squeezes, this, that positioning.
Yeah.
But that chart will kind of speak the language of what we looked at last week, talking about, public markets rallying and private market companies, staying behind as far as valuation, right? Going
Yes.
through the month of January.
Okay, so does anyone? Go ahead, Don. Sorry.
No. So it's pretty in line of what we've been seeing.
Yeah. All right. So like staking. So this is what the SEC had a problem with Kraken, like the way they were running staking. Anybody know what that is or can speak to it at all?
Yeah, I can try to generalize it pretty quick. But also in the context of Ethereum, so this is really your largest blockchain out there. This is an important piece because last September, Ethereum moved from proof of work, which is more your consensus-based mechanism it's scalable, but it takes a ton of time and energy computationally, so it's not great environmentally either. They moved from that proof of work to proof of stake in what was called the merge. So proof of stake was more validators who were running the special computing programs to verify transactions were legitimate to add the blocks onto the chain. But they had to put up a minimum sum of money to kind of validate their decisions that it's legitimate or that's their collateral, their stake. So in a reward for that, they're getting paid a portion of the cryptocurrency, right? So almost, I don't want to compare it directly to SEC lending, but effectively there is a work component that's involved. And then last year also the CFTC, this is the other component, that previously might have deemed Ethereum as a commodity. The SEC has now jumped in and said, you know what, given the profit is derived from work, it's now a security. So that put them directly in the crosshairs of the SEC. So hopefully that kind of answers what is proof of stake and why is this an issue today?
Let me ask you though. The whole point of crypto, it was like decentralized, right? It was outside of regulation. Now, all this stuff is being regulated now. So like, I can understand you got these projects and kind of quote unquote raising capital, right, for the projects. But the use case where this stuff is like away from governments and operating independently on a decentralized basis, like that's gone, right?
That's gone, right? So you got the emergence of a couple great companies. You got like Luca, which is my son's name, so I like it, different spelling, but for back office and administration. You've got C-Currency that does compliance. It's got SEC in the name, right? And a lot of others that are focused on making this a proper ecosystem. It's a legitimate asset class, if we're going to call it not a currency nor a commodity. Maybe it's a security, as the SEC is saying. But I think with the blowups of FTX and a few others, that's why the SEC jumped all over this. They saw it as not even in Hester's.
This just means like staking is like a bond, and these crypto projects, when you're trying to raise capital, it's like a stock. I mean, it's the same thing.
They always were. Have you seen? So my buddy James Catullis, I got to give a shout out for this because I'm completely steal it. So we did a crypto panel, and he said, "Has anyone seen the South Park episode of the Underpants Gnomes?" And have y'all seen that episode? So these gnomes, they run around, they steal underwear, so they break the law, And then they said, so what's your business plan? He said, well, step 1, still underpants, right? Break the law. Step 2, question mark. Step 3, profit. That was crypto, right? We had no regulation. It was the Wild West. Everyone came out and just broke the law. And we tried to see how things kind of fell, right? I think the Ethereum ruling that it wasn't security was crazy, that was a utility token. That kind of was probably a big error in hindsight. And now you're starting to get regulations. So I think this is great for the industry in total. I don't know how great it is for folks that want to ICO anytime soon, but I think it's great for the industry in total. It's great for the investing public. Hopefully it'll attract more capital. But
Right.
yeah, I mean, you went out there and just broke the law because there was no laws, there was no governance, there was no regulation. You were kind of operating in a gray area. And hopefully some of the bigger players be able to shape legislation to the benefit of society, but we'll see.
Right.
I mean,
okay.
that's the whole jam of the SEC is to protect the public, right? And I think that's they're doing the right. Don's smiling. He's smiling.
Well, they don't give a shit when institutions lose money, but the minute retail gets involved, that's when they kind of step in and try to figure it out. I mean, all you have to do is pull up the claims from FTX bankruptcy, right? There's anything ranging from 1,000 to 100 million to whatever, notional amounts in there. And they're finally stepping in and trying to figure out ways to prevent it. Another thing, SBF and 3 Arrows and these guys, they were just prop trading, right?
Yeah.
That was it.
Hedge
they were
funds,
we're taking customer money, we're taking yield farming, staking, whatever the hell you want to call it, and they were just trying to arb a spread and then return the capital back. And then when it didn't work, you see what happened with FTX at the end of the day.
Okay, so listen, you're like you're running down the laundry list. Are any of these exchanges even investable anymore? They're going bankrupt. They got these wonky business models. Now the regulators are coming in, and no one really quite knows where this regulation will play out. Like, you almost got to wait and see who's going to be living in the next, after 12 months from now, right?
End of the day, if you're going to buy one of them, the most secure and safe, I would say, is Coinbase, right? They've been a publicly traded company for years now.
Yeah.
They've been under scrutiny, being a publicly traded company. You have daily liquidity in it. You're getting quarterly financials. It's not really a guessing game. There's analyst coverage on it.
Right.
So if you do believe in exchanges coming back, and one thing we were talking about on the exchange front was just with OpenSea. I know Nick had the valuation, but they raised it 13.3 billion. They were doing 5 billion in transaction volume at its peak, and now today it's 143 million. So if you invested in that company at 13 billion, you're not in good shape right now. I'll tell you that much.
Yeah, it's a bloodbath.
You're gonna be in that for a very long time trying to catch up. Plus, on top of it, multiples have compressed as well. So not only is revenue down 10,000%, multiples in that space have re-rated a few turns. So, writing a check there is probably not the best idea.
Okay, so let's talk just to wrap us up here today. Let's talk IPOs. There's some buzz out there, okay, that the IPO market's going to open back up here. And they got a lot of these big pre-IPO names that we talk a lot about saying that they're going to go. Instacart, Stripe, Epic Games, Chime, right? Here's the returns. These guys are getting smoked, but from a stock return performance, but the revenues are up. Some of them aren't crazy, like Epic Games. And this is not like great data, right? But it's the best I think that's out there. So Epic Games up 4% year over year, Stripe's up 18%, Instacart's up. Looks like it's up 39%. At least they were for second quarter. So the question I have for you guys is if these things do IPO, like I hear like Instacart's coming, it's this summer. I had a little bird in my office this week telling me Chime's going too, right? So like where would the valuations come in? Obviously they're not doing last primary financing round. Is it going to match up with what in the secondary market? Do you think the deals come in higher than that? Like what are the thoughts there?
I think that depends just on testing the waters and what the street's willing to pay. At the end of the day, you saw this massive shift from growth at any price to are you profitable, right? So if you look at what was it, 39% they're saying revenue is up in Instacart. Obviously one of the closest comp to it's going to be an Uber or DoorDash. So let's take how they're being comped by sell side research. Then on top of it, we don't have the numbers, but what are they doing in EBITDA? I mean, revenue could be up 39%, but how did they acquire that revenue? Sales and marketing spend go from 50% to 70%. They're burning more cash. So I think that's going to be the big weighing factor on how people are going to start to value these things. You're seeing it not just in later stage growth, but you've also seen it in earlier stage.
Right.
I've always had the conversation, a lot of venture firms kind of playing Monday morning quarterback, where you're enabling founders saying burn, 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 burn. We're going to be here to give you capital. Market shifts, rates go higher, and you have general partners of venture funds calling these Series A, B companies and telling them you need to get to profitability in 3 weeks. Well, guess what? Good luck, because it's not going to happen.
Yeah.
So,
yeah. So Nick, what, like in the secondary market there, like for the data, right? When you're seeing these, I mean, since ApeView's been around, have we had IPOs? You must have had a few IPOs come through, right?
It's been pretty damn dry for the last year. So I'm not having one that quickly comes to mind, but I almost want to align what we're seeing with what Don just suggested, right? Because if you're looking at your multiples and you're looking at something coming from our world, right, just pre-IPO into the public markets, and then you're immediately having a bunch of good comps. I mean, how much do we start to see the valuations in the secondary market start to align with landing at where that public valuation is? I bet we're actually going to see it coming to fruition, because prior to this, you're going to start to see more financial data coming out for these companies. You're going to start to see them acting more public facing, registering more with the SEC and things of that nature too, right? So I almost feel like the two worlds are aligned, or will be. So I don't know if it's the cart before the horse or not.
Right.
But I do fully suspect you're gonna see a lot of secondary levels almost pinpoint or be a signal to where the stock's going to go public, right?
Right.
Also, it's smart money in a lot of cases. You've got folks on the cap table that have a good sense of what it should be worth. If they're selling right before, they've got a good sense of where that thing's going to IPO anyways.
I
right?
think one other thing to touch on there is, the guys in Boston have a lot of capital behind them. So if we touch on the subject of what we discussed last week being, this kind of shadow market with Stripe and employee liquidity programs, are the conversations being had with the big mutual fund folks? Hey, we're going to get you in at this price. We're going to do a company organized tender. We're going to supply liquidity to our early employees. And what we want you to do is support the IPO and kind of prearrange a valuation range, where if you're going in and say we're going to do a $400 million IPO offering, you've already washed up some secondary, right? Mm-hmm. So you're not going to doing that in the kind of the shadow market we talked about. You have that done. Now you could do a round that's 100% primary, going back to the company in an IPO. And when that happens, you have the support of these big folks saying, okay, we'll do this deal and we'll give you 100 million, another 100 million, 100 million. So the float's already soaked up on the offering. And then, you're going to create that pent up demand at a specific price from other institutional investors. So now you have a deal that went from, let's be skeptical about the valuation to 15 times oversubscribed.
Mm-hmm. Mm. Interesting. Okay, the last item I want to talk about with you guys, I was talking with one of my institutional traders today, and we were talking about the dynamic of these companies, like the folks that participated in the last few rounds, the valuations were so high, and now they're going to go public, to Don and Nick's point, at probably a lower valuation. But a lot of them have preferred shares, and there's liquidity preferences, right? So could someone take a stab at just explaining what a liquidity preference is? And then maybe we could also have a little chat about how that's going to work if one of these companies do go public and it's way below the last valuation, right, for the business.
Well, liquidation preference is basically saying we're going to do a deal at a $400 million valuation with a 2x liquidation preference. So you have downside protection of 2x on the deal. So if it is but you're also, depending on the structure of the business, if that company has $200 million in first lien debt, the debt is senior on the cap stack. Mm-hmm, mm-hmm. And then it's going to go back to the equity holder. Mm-hmm. You could see deals that are done. I mean, people can move their preference around, the same way. It all depends on how they negotiate with the bankers as well and who wants the deal to be successful or not. We've seen it, also with companies with lockup provisions, right? I mean, Robinhood did that convert deal, and they offered an early unlock to
Right.
folks who participated in that,
Right.
because they needed the capital with, what happened during the GameStop AMC stuff. So bankers can move things around with language. I guess it comes down to the fact of how company friendly are these investors going to be at the end of the day.
Sure.
Changing the language of it's not hard. We could do a deal. And
Yeah.
I could say, hey, I'll give you could sell 50% of your position first day of the IPO.
Right. Well, I mean, a lot of these like crossover funds, I think, are going to get are big in these names, and a lot of these names, right? Like the Tigers and whatnot. Any kind of, do you venture to guess how if they would be super friendly, or do you think?
I don't think they own enough of the company to. If you look at Tiger's positions, I mean, Howard, my partner, always talks about this, but we saw what happened with SoftBank with WeWork, and everyone's like, well, thank God this didn't get into the public's hands. And all it really did was create 1,000 other SoftBanks, right? So at the end of the day, it's, it's just a very interesting dynamic.
Right. Right. So, Clint, what do you think of these businesses, man? Instacart, Stripe, Epic Games. I mean, it's interesting because I'm interested in your opinion as an allocator. Like these private company stocks have gotten beat up big time, right? But they're performing well. So how do you kind of view that as an investor?
I mean, so I always look at it through the lens of where we are from a macro perspective, and so I'd be interested to see just kind of how the liquidity shakes out and what these IPOs do look like. And I would love for people not to go IPO if it does look bad. Otherwise, that tells me that there's some big players wanting out, and I'm probably not going to be that interested in that name if it's not priced right. But yeah, I mean, I'm genuinely interested in a lot of these names, and the valuations are obviously a lot more attractive than they were in 21 when they're all down 50 to 70% or whatnot. It's 50 to 80%. But it'd be interesting to see how the liquidity is in the market today for IPO, because liquidity trends aren't exactly robust when you look at it from a top-down perspective. So I would love to see just see where the market is. I think it'd be a good barometer, and that would probably dictate more about how I'd want to be positioned. Because when I look at the economy slowing, the Fed slowing, even though market trends are positive, that's a lot to Don's point earlier, positioning. A lot of what we're seeing in these FOMO options, right, these 0 days to expiration options that we're seeing is just craziness. A lot of the meme stocks, bankrupt companies up 200%, right? So, when you look at market trends, that's really the only thing positive the market has going currently is sentiment. I would love to see liquidity trends turn around. That would make me bullish in general on the overall pre-IPO space, more bullish than I am today. It would actually entice me to take more action. So I think that's really what I'm waiting on, is to kind of see where those liquidity trends are, more so than I am just, hey, where this individual business price. I want to get a better macro view because I'm kind of in the dark here.
Right. Okay. Gotcha. All right. Well, Bush.
I'm almost curious. Sorry. To Clint's point about the meme stocks, the retail involvement, which I know he always likes to touch on. I almost think the retail investors are hungry to get some IPOs out there because there hasn't been anything. And all these names that have been private for so long, I feel like they've been chomping at the bit, and then no IPOs to date. I'm just curious, because if you look at the recent IPOs or the IPO index, the VC index, it's way down. But maybe this year is going to be different. The pent-up aggression of these guys sitting with their Robinhood accounts ready to go.
They're tired of Bed Bath & Beyond.
You've seen some secondaries, right? You've seen some secondaries over the past few weeks. I mean, some people got plugged on them and they didn't work, and some traded flat. I think if you look at the IPO market now compared to where we were coming out of the global financial crisis,
Right.
there was a lot of pent-up demand. Nobody really started deploying money again until 2012. But in the meantime, infrastructure for all of these companies was built out of the GFC from 2006 to 2011. Now you just have this has been a big thesis theme that I've worked on, but now what is it? I mean, Stripe is infrastructure. That's a real business.
Yeah.
But a lot of these companies that were been created from 2018 or whatever, 2016 until today, that are candidates for IPOs with really high valuations, they're not infrastructure. A lot of them are just nice to have feature products.
They're UX.
So it's way, in my opinion, it's much different on the pent-up demand, and that's kind of what worries me. Of like, I see some of these businesses, I'm like, that's a great company, that's investable long term. Management has a good pulse on their business. They're still growing 100%. They're free cash flow positive. Those will get well respected by institutional and retail investors. But some of these other companies right now are just struggling to get out of the mud in the current market and doing, egregious debt deals or whatever it is, or 3x liquidation preferences.
Right.
So I think the dynamic of it's a little bit
A
different.
little bit wonky, yeah, right. All right, so listen, what else is going on? What's on anything else on your mind this week? What's hot? Is it AI? That's the only thing anybody wants to talk about with me is AI.
I want to talk about Adam Neumann's new apartment deal.
Flow.
I saw that pitch
Flow.
and I didn't quite follow it. So.
Adam Neumann, he just won't go away.
The rumor is
Okay.
he could walk on water.
Shoeless, naturally, right? No shoes
I
on.
thought he could turn water to wine. Is what I thought.
Yeah, right. I mean, this guy. I mean, like, listen. Everybody. I listen to a few of these podcasts. Right? They're like, oh, the guy's he goes after big things. He's got big visions, big TAMs, the whole thing. He should get the check.
He
He
got a
goes
check
for it.
for an apartment complex, but I couldn't follow
Who
the
led
pitch.
that? Andreessen, right?
Yeah,
Yeah.
Andreessen. Did you guys see the pitch?
Well, I could tell you the phone call probably was. They were probably like, hey, we're launching an RIA business. You're worth $4 billion. So we'll give you a check. You're going to move $2 billion in assets over here, and everything's going to be great.
Well, it was so Clint. I didn't see the pitch, but I heard someone talking about it. Right? But it sounds like there's almost like 3 or 4 companies. Like there's a real estate company. And then there's like a fintech company. Yeah. It's
Yeah.
like a couple different like little businesses underneath the Flow moniker, right?
Yeah.
But it was funny, man. I'm hearing like these buildings are supposed to be like a Soho house or something. Like it's going to be sexy in there. You know what I mean? Like the pool and the bar and all that. I mean, I don't know if I could live in a place like that. I wouldn't get anything done. It's like a party all day long, right?
Well, I mean, it's funny. This existed like 10 years ago.
It's
though,
called
under
WeLive?
WeLive. Yeah, exactly. No, that was it. So WeLive did exist. If it was 8 years ago or 10, whatever it was.
Did you live there, Nick? Did you live in where we live?
No, but it's basically
You
you
met my wife
graduated
there.
from a college dorm, and you go directly to a college dorm style living situation.
I like
in,
that. I like that.
in
College
New
dorm,
York, right?
college dorm for adults. That's nice.
Yeah, similar environment to how WeWork's business.
I was at a WeWork last week to meet a company, and it was packed.
Was it really?
And I said I couldn't even find. I was waiting for my buddy. I couldn't even find a room on a couch.
I couldn't
It
listen.
was
I
like
can't.
overwhelming.
I can't with the WeWork. I can't. Like, I don't know, man. It serves its purpose. It's a nice model, especially if you're starting something new. It's month to month, but like, it just seems a little too. What's the right word?
But Aaron, think about the future though. Think
Trendy,
about Chat
right?
GPT.
Maybe I'm just too
Yeah,
old
think
school
about
financial services, right?
That's what I'm saying. Think about future. Think about you, right? Think about the future. You want to be a one-man shop with Chat GPT, and you're running an efficient business, right? Doing whatever you're doing, right? I mean, WeWork's a good little spot for a thin startup.
Something
If he would
like
have
that.
just owned the
It's
business,
true.
if he would have
It's true.
owned the real estate, if he would have just owned the real estate.
The real estate guys did well. I mean, they had a real estate fund behind it. They got their money out some return. If you were an equity holder, you got smoked.
You did
But
okay. Well, Flow. I think we should nominate Nick to go and move into a Flow building for a couple months.
I'm
and then
taking my
report
shoes
back.
off right now. Sounds great.
I'm down to chip in for that. If anyone wants to go in and try it out.
Do a little experiment.
Yeah, man, that'd be fun. All right, boys, let's call it. This is the first late afternoon. I saw one cocktail come out. I saw Don with the little red wine there, right? But I guess we're maybe too responsible. Next week, we'll maybe
That's it.
have it going, right?
Tip in.
well, you go out on Thursday nights, so
Yeah, right. I need to wait.
We'll have ChatGPT send around cocktail recipes for us on, next Friday.
That's right.
There you go.
I love it.
By the way, earlier, just to end it off here, when we were talking about the question with capped profit, and I think Clint was explaining it, I wanted to see where I could get a quicker answer, so I went on ChatGPT.
Yes.
And it explained it 10x faster than Clint. And I have
So much
whole-
smarter than me.
Listen, maybe we should have ChatGPT join up, like hook it up to a voice and have it be a fifth on the podcast, right? With us.
That's called building a business. We're going to have a ChatGPT AI focused podcast.
I love
It's
it.
going to be the first of its kind.
I love it. Why even have us on there? We'll just have 4 ChatGPT bots talking to each other. Why not?
And we'll have our avatars, our realistic avatars.
That's right.
Yeah.
Photorealistic avatars. I like that. Maybe one day. Coming soon, right? All right, gentlemen. I appreciate you guys. Have a good weekend, all right?
See you guys.
All right.
Guys.
Take care.
Later.
Cheers.
Bye.